Best ride. I'd have to say Drumheller, like coming down those huge hills in that beautiful desert scene and having the wind blowing through my hair. Back then I had hair. Yeah, it's gorgeous.
Welcome. This is Uncommon Sense, a CPA podcast presented by the Heshe CPA Knowledge Center. The center is an initiative of the CPA Education Foundation, the charitable arm of the Chartered Professional Accountant profession in Alberta. For the record, this CPA podcast isn't about bean counting. Our episodes feature conversations with Alberta CPAs sharing their insights on a wide range of timely topics. Hello, I'm Gordon Turtle, your host for this episode. If you're like me, you probably find the world of cryptocurrency and crypto assets to be a bit bewildering. Okay, well, maybe more than a bit. But cryptocurrency is here to stay, so fortunately, this episode's guest is just the person to shine some light on this very timely topic. Chartered Professional Accountant Candy Davis is a seasoned accountant offering a range of traditional services through her own firm, Davis Accounting and Tax, in Spruce Grove, Alberta. She excels in providing comprehensive tax and advisory services, seamlessly collaborating with both business owners and estate executors alongside their other trusted professional advisors. What sets Candy apart from most other CPAs is her expertise in the world of crypto. With years of experience with cryptocurrency, she delivers customized services tailored to the needs of Canadian individuals and small businesses navigating the crypto world. When she's not helping clients, Candy likes to pursue her passions for fast cars, motorcycles, video games, and weightlifting. Candy is here to demystify the crypto world for us. So let's get started. Welcome, Candy.
So happy to be here.
Thanks for coming in today on such a cold, wintry day.
It is.
Okay, well, Candy, let's start with the basics. What is cryptocurrency and how does it work?
Okay, I would say if we're going to have a very basic general definition of cryptocurrency, it would be an intangible medium of exchange. So intangible means, of course, you can't touch it. It exists in the digital realm. And medium of exchange would be you can use it to buy goods or services. So in place of cash or fiat.
So I've heard of Bitcoin. That's a type of cryptocurrency. Mm-hmm. Are there other kinds besides Bitcoin?
Right now, the last numbers I heard, there's about 23,000 different types of cryptocurrencies. So there's a ton out there.
How did you as a CPA become interested in this area and decide to make it a field of specialization for your practice?
I didn't just fall into it. So actually, Bitcoin itself, our very first cryptocurrency, was released in 2009. And shortly thereafter, I started mining cryptocurrency. So I was one of the original people involved with mining. It was Bitcoin and Litecoin at that time, so we didn't really have anything else. And I was already in accounting and working on my CGA and obviously my CPA at the same time. So when I finally finished, I realized that there was such a need for expertise in this crypto realm. Like as far as accounting goes, there wasn't a lot of understanding among professionals on what crypto was. So then to deal with the taxation of that was just mind-boggling to people. So I sort of took the lead and decided that I would be that person to forge ahead and fill that spot.
Well, you mentioned the term mining. I think you said mining Bitcoin. What does mining mean in this context?
Okay. Mining is different now than it used to be. So when I started mining, I had a computer with a GPU. It ran certain software, and that software would run algorithms or mathematical problems it would try to solve. And when it solved those problems, you would be rewarded with cryptocurrency, Bitcoin at the time. And it was very, very easy to mine cryptocurrency. Today, it's vastly different. Today, you have warehouses full of servers, hardware, like hundreds of thousands of dollars worth of equipment that need to mine simultaneously to solve these complex mathematical problems.
So you would get rewarded with Bitcoin. Did you have to pay for the Bitcoin, or is it just by doing the mining that you got the Bitcoin?
Right. So the Bitcoin is a reward. So what mining is the process of validating transactions that are occurring on the Bitcoin network. So if you purchase something with Bitcoin, that Bitcoin is going somewhere. So on the blockchain, you'll see it going somewhere. When somebody mines it, they are validating that that transaction occurred and adding it to the blockchain. And so at that time, for doing that process, they are rewarded with cryptocurrency.
Interesting. So here's another basic question for you. You mentioned the term blockchain. What does that term mean, and how does that relate to the crypto world?
I know blockchain is sort of complex and hard for some people to understand because you can't see it. But a blockchain is basically a digital ledger. So as I said, when a transaction occurs, somebody has to validate that transaction. And actually how it works is that there are many, many, many computers that validate that transaction and confirm it at the same time. So it's copied or confirmed many times, and it's added to what's called a block. So a block is just a series of transactions that have been confirmed. And when that block is created, it is added to, a long string. Picture a long string of blocks. That block gets added to that string, and that makes the blockchain.
So we often hear the term cryptocurrency and crypto assets. Is there a difference between those two things?
I think that we use cryptocurrency interchangeably for anything, but actually cryptocurrency is a type of crypto asset. So as I mentioned before, cryptocurrency is often used to buy goods or services. So it's interchangeable for something. We also have a whole bunch of other crypto assets that you can't do that with. So there's things called utility tokens. Utility tokens can be used only within their certain ecosystem. So, for example, if you have a video game, that video game might have tokens, and those tokens represent things you can buy, but they can only be used within that game. You can't use them to go out and buy a car in real life. And so that would be an example of a crypto asset. So cryptocurrency you could spend anywhere. This other token you can't. Both crypto assets.
Okay, well, that makes sense. Are personal or business earnings from crypto assets taxable? And if so, what are the biggest challenges you found in dealing with crypto assets when it comes to taxes?
Hoo-wee, that's a loaded question. Short answer is yes. Yeah, absolutely taxable. I've worked in this field for a long time, and I think that there's a lot of misconceptions by the public on what is taxable and how it works. And part of that has to do with the fact that Canada was really delayed in providing guidance to the public. Like other countries, the States had guidance out on what they wanted people to do, and the UK did. And people in Canada are going on Reddit or on other sites, and that's where they're getting their information. So in other countries, it might not be taxable, or it might be taxed differently. Yes, crypto assets are taxed in Canada, absolutely.
Have you found in your practice that people come to you and go, I just realized like this last 10 years I've been making money and I didn't pay taxes and now I owe a bunch of taxes?
Yeah. More often I think people are confused about when things are taxable. So somebody will say, well, I put money into this exchange and all I've been doing is trading different crypto assets, but I've never pulled money out. And in fact, in Canada, every single time you do a trade, you trigger a capital gain or a capital loss. So it's very unintentional most of the time, not like tax avoidance, just that people aren't aware of how the tax works. So then there's panic 10 years later, yes.
So even if you haven't pulled your money out of the crypto world, it's still considered a capital gain?
Right. So if you trade one crypto, say you trade a Bitcoin, or you use a Bitcoin to buy a candy coin. That's my coin. So you use a Bitcoin to buy a candy coin. That's a disposition of that original Bitcoin. So that's why you're going to have a gain or a loss. So every time you do that, whether or not you're changing it back to cash, there's taxable transaction.
Oh, okay. So what's a candy coin?
Candy coin is actually an NFT. Have you heard of NFTs?
Well, no, I think I'd like to learn more about that, though.
Okay.
That's a non-fungible asset, correct?
You are right.
Okay.
You are right. Okay, so I'll explain that, and then I'll explain the candy coin. So A Bitcoin is fungible. And what fungible means is you can trade it for another Bitcoin, another Bitcoin. They're all the same. They have the exact same properties. Now, a non-fungible asset means it's very unique. It represents its own thing. You couldn't change it for something else, like not even another NFT because they're totally different. So NFTs are most commonly associated with ownership. So ownership in something digital like a song, a picture. It can be related to things in the real world, but tends to be digital. So I was preparing to host a big conference or to speak at a big conference, and I wanted to be able to explain what NFTs were. And I never have had an NFT. So I went and made my own AI picture of myself. So I'm like a very cool, I think I'm cool. I'm a very cool young girl with a mohawk. And so I made this candy coin. So it's a coin with the mohawk girl on it. And that was my NFT. So there's one out there in the world. It is registered as an NFT on the blockchain.
Wow. So people can purchase those or?
Well, there's only one.
Only
so
one.
It represents a coin, but it's not really a coin. It's actually an NFT. I know that's confusing. So it's a picture. It's a picture of me being the cool crypto accountant.
Wow. Yeah, that's really interesting. I remember a couple of years ago there was something about Melania Trump having NFTs that everyone was ridiculing her for. But
Oh, Justin Bieber, too. I think he lost a lot of money on some NFTs.
Oh,
yeah.
wow.
Yeah. I probably wouldn't be dumping my money in them, but, to each their own.
Excellent. So how do businesses use cryptocurrency these days? Is it a part of businesses, and do they accept it as cryptocurrencies as payment for goods and services?
Some do. So I think there's two different kinds of businesses. Some are already involved in the crypto world, so they might be software developers or, they're developing apps for the blockchain. They might be consulting somewhere in the crypto realm. So those people are already deeply involved in crypto assets, and they tend to get paid in cryptocurrency. So they're one whole, category of their own. And then, like you're asking, there are companies that are just curious about maybe accepting it as a form of payment. One of the biggest ones that I can think of off the top of my head would be Overstock.com. So they were very early on accepting cryptocurrency, Bitcoin specifically, as payment. But there's other sites where you can exchange cryptocurrency for gift cards. So you can get Home Depot, Lowe's, Rona, Canadian Tire, anything you want with your crypto.
Does Davis Accounting accept crypto?
You know what? I used to, and I don't anymore. And there's actually a reason for that. And that reason is that cryptocurrency is so volatile. So the price can be, $100,000 for a Bitcoin today. And then Donald Trump will tweet something, and then it's 80,000. And so the issue there is if I'm receiving payment of a certain amount and it's in cryptocurrency and I haven't cashed it out to fiat yet, then I might be getting less than I'm expecting. So,
You're right, yeah. So is it kind of like buying something on the stock market, like investing, where it's kind of a risk versus reward situation?
It's exactly like that. So I would attribute crypto investing to just the most high-risk stock trading that you could do. And generally, it's day trading that people are involved with. So they're used to those ups and downs. That's what they're chasing.
If a small business, or any business, it doesn't have to be a small one, we're thinking of accepting cryptocurrency, what should they know and how should they prepare before they go down that road?
That's a good question. I think, sort of to the point that I just made about the fluctuating value of crypto assets, I would say have a merchant system in place that liquidates it to cash right away as soon as you receive it. Don't be holding it in a wallet or on an exchange because you don't know what the value of that is going to be. Or if you're interested in maybe investing part of your portfolio, keep, your $10,000 or $20,000 worth of crypto, but get the rest in cash because that could make or break a business.
Yeah, that makes a lot of sense. So if they cash it out right away, they know the value of it on that day,
Right.
presumably.
Yeah.
What types of security risks can a person run into when it comes to cryptocurrency? Are you seeing in your business a lot of fraud and scams in that world? And if so, how can someone avoid being victimized by those types of scams?
Whew. Okay, this is actually where I do the majority of my work as an
Oh,
accountant in crypto. And it's quite sad. So that you have issues like, the bankruptcies of certain exchanges, that's been happening for a long time. There's things that you can't control like that. But it's the fraud and the scams right now, which are unreal. There's one that's referred to as a pig butchering scam. Have you heard of that?
no.
Okay, so this is the most common thing I'm seeing with Canadians right now. And I mean, like every week somebody's coming to me with this story. So it generally follows the same sequence of events. So you'll have an individual, say you. Okay, so you are approached by somebody online. So either through Facebook or Instagram, Snapchat, WhatsApp, and they're gonna get to know you, become your friend, gain some measure of trust with you. And then they're going to say, hey, you should invest in this awesome platform. And that's what happens. The person is like, well, maybe I'll try it. And they'll be like, well, I've been getting huge gains on here. You for sure should. So you're going to put a little bit of money in there and just see, right? Because you're kind of cautious at first. And so you put some money in and you see that you've made so much profit all of a sudden. You're like, wow, this is really cool. And then maybe, you're kind of street smart when it comes to this stuff. So you try to withdraw a little bit. And generally you can withdraw a small amount. So what I'm seeing is people get to this point and they're like, oh my God, this is my retirement. I've got this. I'm going to be rich. And so they will liquidate everything they own. They will cash out their RSPs. They will sell cottages. They will get rid of their TFSAs, get all their life savings and dump it into this thing. Now, if you have guessed by now, this thing doesn't really exist. This isn't a real platform. It's manipulated by somebody on the other side who's showing that these trades or gains are happening. And so once they have all of your money, one of two things happens. One, they just disappear. The site no longer exists. Or two, you will try to withdraw your money because now you've made $5 million, right? It's time to cash out. And they will say, oh, you know what? You owe capital gains tax on this. So send us $500,000 and we will release the funds to you.
Wow.
And then, of course, they're gone.
Wow.
Yeah, it's messy. So that's very common right now.
It is, eh? And people are losing huge amounts like that?
Yeah, I mean, my clients, anywhere from 1 to 10 million would be normal.
Wow.
Yeah, it's very sad.
So when people come to you with having experienced that kind of loss, what do they expect you to do?
A lot of people are hopeful that money can be recovered, that investment that they've put in or that crypto, sometimes they don't understand that crypto actually doesn't exist, right? They didn't have that fund at all. So a lot of people come in hoping to be restored to, full. And that's not possible. But generally what we can do is claim a loss for tax purposes. So they won't get their full amount back, but they would essentially get the tax on that amount, either as a capital loss or a business loss, depending on the situation.
Okay, well, I guess that's better than nothing.
Yeah, it's something.
Yeah.
Yeah.
Have the police been able to ever track down the perpetrators of these kinds of frauds, or it's pretty tough to do?
No, it's really hard. There are places where you can file complaints, but it's my understanding that tracing these perpetrators is nearly impossible because they're all in other countries and, they've got their VPNs. I don't even know how this works, but they're hidden and they're really hard to track down. So I guess I should tell you that the other part of this scam that happens 6 months later is you would be contacted by someone saying that they could recover stolen crypto for a fee. So that also happens. I have a client that's going through that right now. He lost $2.4 million. And they said that his funds were stuck on the blockchain. And for $200,000, they will help him unstick it, which it doesn't make sense at all. But yeah,
Wow.
Scammy.
So what can people do to avoid that? Is it just a matter of being wary, and if it looks too good to be true, it probably is?
That's a start. The other thing is, we have something in Canada called the Canadian Securities Administration. And exchanges in Canada, at least, are required to be registered with the CSA. So anybody that's registered with the CSA has to follow strict guidelines. They're upheld to a higher standard than these other places, these other exchanges and companies that are abroad. So I would say check that list. I mean, even in the example I just gave you, the company that this one person just dealt with who lost the $2.4 million, that investment company was listed on the Canadian Securities Administration page as fraudulent and not to be trusted.
Oh, wow.
Yeah.
Could someone pose as one of those listed exchanges?
That does happen too. We have cloned exchanges. So, yes, that is a thing. I would say part of this pig butchering scam, if they send you to a site, sometimes that site that you're seeing for that exchange, the website address is one letter off, and it's a cloned version. So it might be something you've heard of and you think is a real exchange and a trustworthy exchange. So there's a lot to pay attention to.
Yeah, no kidding. Wow, that sounds scary.
Mm-hmm.
So having said all that, what would be the 3 most important tips you would give someone who's thinking about dabbling in the crypto world for the first time?
Oh, man, I have so many opinions about this.
Well, let's hear them.
Gambling money. Number 1 would be gambling money. So don't put in more, especially if this is your first time, don't put in more money than you would put in a slot machine. That's money you're willing to lose. Yeah. 2, I would say that Canadian Securities Administration, check that out. Make sure that if you're finding an exchange to use to buy and sell through for the first time, that they are listed as being registered with the CSA. That's super important. And what else? Don't get your tax advice from Reddit. Find yourself a crypto accountant because there's so much misinformation out there, and we don't want that.
Yeah, those are 3 good tips for sure. So you've spoken to me about talking to post-secondary students about integrating cryptocurrency into their accounting practices when they graduate. And what do you think post-secondary students should know when they're planning careers in business and accounting when it comes to cryptocurrency? And what skills would you recommend they develop in this area?
I like this question. I'm really passionate about growing this part of our profession of accountants because it's a lonely area that I'm in right now. For anybody that is, in high school or in post-secondary and they're interested in accounting or some field in business, the crypto realm has a place for you. So if that's the direction you want to go, I think that you need to be hands-on. And what I mean by that is set up an account with a crypto exchange, buy a little cryptocurrency, learn the process of how it works so that when you're working with clients, you understand exactly what's happening. And this is an area that's changing all the time. So, this is a general conversation today. But the things that are happening with cryptocurrency right now aren't just normal investments. We have security where you can buy a portion of a house. You can, have ownership in a house right now with a security token. We have decentralized finance for borrowing and lending and so many things that are going on. And so you're not going to know all of that as a student. Even I don't know all of that. So I would say, on top of trying to be as hands-on as you can, YouTube the crap out of anything in this field. Get at least a general understanding of what's happening.
So one final question for you today. What do you see as the future of cryptocurrency? Is it passing fad or is it something that's here to stay in finance and business?
Oh, I don't see it going anywhere. It's been 15 years now. Crypto assets have been around for 15 years. And as I mentioned, what we're doing or what we're seeing being done with crypto assets is changing all the time. So I think we have to be prepared to see a huge shift in the digital realm. I believe this is where we're going to see everything happening in the future.
Do you see any risks about that? Does that present a risk to like financial stability in a country or monetary stability, shall we say?
I'm not sure. I mean, that's sort of outside my purview, but I know that there's many governments that are looking at making their own coins right now available, like their own crypto assets. Canada, in fact, is also looking into that. So I think that the world, and governments included, are now looking at how to integrate that into the monetary system because that's the direction that people want it to go.
Well, that's great. I think that's a perfect place to stop. So thank you so much, Candy, for all that information and for walking me through this fascinating and complex subject.
Absolutely.
You've given our listeners a lot to think about and a lot of valuable information in ways that are clear and understandable. So thanks. It's been a pleasure to chat today.
Thank you.
The Uncommon Sense podcast is presented by the CPA Education Foundation and funded by the Heshe CPA Knowledge Center. The Knowledge Center was created through a generous donation to the CPA Education Foundation by the late Brian Heshe. Brian was a distinguished Albertan, business leader, CPA, educator, and community builder. His generosity and commitment to education underpinned his good works across Alberta throughout his lifetime. The opinions expressed on this podcast do not necessarily reflect the views of the CPA Education Foundation. We would like to acknowledge that the CPA Education Foundation offices are situated on the traditional Treaty 6 and Treaty 7 territories and Métis Nation homeland. The Foundation acknowledges that we reside on traditional and ancestral territories of many Indigenous, First Nations, Métis, and Inuit peoples. Their histories and culture influence our community to this day. The CPA Education Foundation is committed to helping build a province where Indigenous people and their voices and experiences are heard, valued, respected, and celebrated. Technical and recording services for this podcast provided by Wolf Willow Studios in Edmonton. If you enjoyed this podcast, please be sure to like, subscribe, and tell your friends about us. If you have any comments on the podcast, write to us at cpaef@cpaalberta.ca. To learn more about the CPA Education Foundation and the Heshe CPA Knowledge Center, visit cpaalberta.ca/foundation. Thanks for listening.